All right. Pleasure to have you joining us. Just so you guys know, if you don't know me already, my name is John deRoulet. I'm the head of revenue management education here at Wheelhouse. Um, been with Wheelhouse for quite a while, over 4 years, primarily working with people on training and learning revenue management and learning the platform. Prior to my time at Wheelhouse, I was a revenue manager pretty much for my entire career in this industry. I worked at an organization called Stay Alfred for over 8 years, where I led a revenue management team of 10 analysts over a portfolio of about 3,000 units across all over 30 cities in the US. So, pretty large organization pre-COVID with a lot of experience on the property management side doing revenue management directly. So really excited to kind of talk to you guys today. We're going to have a conversation that is hopefully interactive. If you haven't been to one of our data deep dive town halls, we figured we do something where we bring a lot of revenue managers on called our revenue management roundtable. We thought it would be really valuable for people to be able to do that in a specific market for their specific region and really dig into the data and have a conversation about what people are seeing. Um, Before I jump into some data and the conversation, I'm going to give you a brief product thing, like 2 minutes, and then I'm going to move off the product for now. But we're going to talk a lot. I'm going to show you a lot of data in the system. We also are going to talk a lot about pace and different kind of data points. Wheelhouse does offer our entire business intelligence suite for free now. So if you don't have a way to easily see your pace, to see where your sales are, and to compare that to market data, let us know. We'd love to get you set up on our performance analytics tool. It is free along with a lot of the market data I'll be showing you. Okay, so enough about that for now. Um, quick questions to start off the conversation. Um, how are you guys doing? How do you feel the summer is going? What are you seeing in your own portfolios? I know I'll give you a little bit of framing. I know across the Southeast and especially the Panhandle area of Florida and Alabama and Texas coast, so the whole Gulf Coast, a lot of people were pretty panicked over the spring. Like around it, by the end of March, people were pretty concerned about how the year was going. We're, fast forward 3 months later, have a lot more mixed views. I'm curious, how is the summer going for you? How did the end of the spring kind of come together, and how are you feeling about the year right now?
Yeah, I think our biggest thing is trying to hit our goal, same numbers as last year, because looking at market data, it seems it's another downward trend this year. Um, and it helped with Easter being back in April as well. But yeah, our goals is pretty much just to get to where we were last year and say, hey, we were able to replicate what other people weren't, basically off of cheaper rates and occupancy. Try to get to the averages with more occupancy somehow.
That makes sense. So, still trying to get back to last year. That wasn't super optimistic. So, still kind of like in the trench battle, I feel like, is what I heard from you, Bailey.
I mean, we filled out our June. Our June is mainly just dealing with gap nights at this point and whatever we can get. We've reached our goal for June. July, our bigger units have booked in July. It's just getting those one bedrooms across the finish line with the short booking windows and trying not to give them away. But
Makes sense.
I think the economy is probably gripping on the smaller, younger families a little bit, especially with our audience that comes down to Gulf Shores, Orange Beach, Perdido.
Definitely makes sense. Leslie, I saw you come off
Yeah.
mute.
Yeah, absolutely. I just to echo Bailey, we're over at Alabama Getaway. We're doing a good bit of the same. We're filling in gap nights at this point. A lot of wheeling and dealing. A lot of back and forth, even from our over the ear channels. People are reaching out probably more so than I've ever seen before, asking, "Will you take this amount? Are you willing to discount any?" And we're really just trying to I feel like we're doing well in terms of like the area. So our comparison and our pace point, I feel pretty confident that we're doing the best that we can do. And I think, given the economy, that's all we can really hope for is, just kind of you're kind of up against yourself, I think, in this space. So yeah, definitely seen a lot of what he had mentioned as well.
Definitely makes sense. Yeah, the kind of wheeling and dealing is interesting. If people doing a lot of direct negotiation.
Yeah,
Um,
even direct bookings, even and we're seeing something that we didn't see in the past. People are they seem to be continuing to shop around even after booking and then coming back and saying, "Hey, I see this condo. It's, half the cost that I paid back in March." And man, that's a tough conversation, but I've had a lot of them. So it's a trend that we haven't seen in the past that we're, trying to navigate how to deal with that at this point.
that's very interesting. Um, just to follow up on that, what kind of cancellation policy do you use?
So we have a tiered cancellation policy. 3 bedrooms has 30, 4 bedrooms and up has 60, and houses. So, there's a little bit of wiggle room, but even people within their cancellation window are starting to kind of poke a little bit. And it's 100% reflective of everybody being just really uncomfortable with the economy. Simple things like, even for my own family, food is much more expensive, and things like that. So I think people are constantly kind of looking at where they are budget wise, and trying to figure out where they can trim things out. But um, the cancellation policy has unfortunately been something that we've had to lean into a little bit harder, I guess. You know so
Totally,
we have.
definitely understand that. Bailey, are you seeing any of that kind of cancellation trend, or if you have a looser cancellation policy, do you see a lot of kind of churn over in the last minute window too?
Yeah, we actually implemented a more tiered cancellation policy as well because we were seeing some of the same problems with that. We were also on we're on so many different platforms now. We're on Wednesday and all these other ones. So we've had to tier it and protect our top earners, obviously that make 10 times what some of our other units are. They deserve special attention, so they're getting it.
That makes sense. That makes sense. Yeah, I've heard from different people in the area, and really this is pretty consistent most places across the Gulf, where I think the revenue management and the cancellation policies have kind of it's broken down a little bit more than like I think the revenue management's more sophisticated, which means people have pulled back on some of these restrictions. You don't see it quite as much across like the Carolinas, where they're still kind of holding 7 nights and very strict policies, but you're seeing those start to like roll back now as they're under pressure. I think a lot of that's already happened over the last few years across the Gulf, and there's like definitely a trend of like for some of the large users can really see it where people are canceling and rebooking also to get the lower rates. And pretty mixed responses on that. Some people are very concerned about it. The largest operators, I think, are a little less concerned because they, you know, so there's going to be a group of consumers who are always going to be like that, no matter what. And it's not worth like punishing it. Like you don't want to risk punishing people who aren't like that by setting restrictions to try to get around that. Um, and I think for our largest operators who've kind of thought about it, they tend to be a little less worried too, because I think early in the year or even late last year, they were looking for a little bit to stabilize their pricing, to not push premiums, to really roll back how hard they were pushing their ADR, at least initially and in advance, which in their minds kind of mitigates that anyway. If you don't have these big swings between your highest rate and your lowest rate, there's less incentive for people to do that anyway.
We
Uh,
are seeing good responses from little adjustments to rates to essentially hooking the fish that is the consumer. So I am convinced that there are people just waiting for the right price. I think all it is right now is the right price.
I definitely agree with that. I think the consumer can be really sensitive, and I always, when I talk about revenue management with people, try to frame it as like, I mean, honestly, this is why I think it's good to get together and talk with other people in the market, because your revenue manager, for the most part, you're competing against your competitors a little bit, but you're mostly competing against the consumer because nobody really knows where the consumers want to buy at any given time, right? We're guessing. It's not true for your home acquisition. They are competing with your competitors, but your revenue managers are really competing against the consumer, and it helps to kind of talk to get an idea of where things are. I also do think kind of in line with that, and we'll talk about this a little when we jump into the data, but I think our industry still holds premiums a bit too much. And part of that is a portfolio size thing, but as you get larger and larger in scale, people really need to shift into like a build your rate up over time and actually raise the rate. So when we look at some of our largest revenue management organizations, that tends to be what they're doing is they are starting much closer to where they were historically and then building up the rate as they see demand, and they let the consumer tell them what days are going to get the demand, right? Now, they don't do that for every unit. There's certain units you need to protect and just make sure you like hold the premium. But when you have a big enough portfolio, that tends to be a way of doing revenue management that hopefully stabilizes things. April, did you want to talk to us a little bit about what you're seeing as well? I know we've been chatting a little here and haven't given you a chance to speak.
No,
Um,
actually, I'm bouncing between the front desk and here, so I'm just kind of bouncing in and out.
No problem.
Summertime.
Um, okay. Well, good initial conversation. We'll jump into some data here. Um, it looks like we have both kind of like Pensacola and kind of Gulf Shores area. I'm going to start with Pensacola. And one thing I like to do when I do these presentations is I do a little bit of looking around just to see what's going on. We'll cover both. I just pulled up a few things that I thought were kind of interesting. One of them is on the Pensacola, Visit Pensacola site. And they have this research tab, which is actually not super easy to find on the website. It's not like on the front of the website. Um, but if you just type in Visit Pensacola Research, it'll take you to it. And they actually post really pretty comprehensive insights by month. And they're keeping up with it pretty good. So they've already done April and we're in June, so they're really not trailing much. And this can be, I think, really a helpful place to kind of see just some basic data in the market from another source. And I always like to show various sources of data, especially because if you're talking to owners, you know, it helps to have a case where you're kind of repeating what you're saying across different places because otherwise, you know, that's easier for them to say, well, I don't believe you. But if you give them these different sources, they can kind of see what's going on. I pulled up this April 2025 visitor trend, which I thought was pretty interesting. They've got some good slides which you can grab, but there's a few that were pretty major. This slide here, which is just giving us general hotel, vacation rental, and airline statistics. And this was pretty interesting to me that visitors are down, but airline passengers are up, right? Um, pretty fascinating. Obviously, not every airline passenger is going to be a visitor, right? They could be people going other places and coming back. A little bit of a difference here in the hotel stuff year over year. Hotel occupancy down a little bit in April. ADR up slightly, but not much, really negligible. Vacation rentals look a little different. Occupancy for April, this is just April, also up. Room rates up quite a bit. I clicked into a few other of these too, and when we dig into the data, you'll see, you know, we tend to see room rates being pushed a lot more in vacation rentals than hotels, which kind of makes sense, but also I think maybe kind of a portion of why certain months have not performed quite as well. I think FY25 means year to date, but I actually have never seen someone use FY as a term. Um, but this one is where you can see, you know, still pretty negligible differences on the hotel side, pretty big differences on the vacation rental side. Rates are up, but occupancy is down. That is an environment we've seen pretty consistently across the Southeast, where the vacation rental side is really pushing a lot of their rate positions, but where the consumer's rejecting them, we're not like capturing back that occupancy. But we don't always see the same in the hotel side. Now, this one was one that I thought was pretty useful is I think these visitor origin markets are always really fascinating. We'll come back to this one because this is the Pensacola one, obviously. But I do know that Gulf Shores also just got a new airport, right? Which that's going to be pretty fascinating. So anyway, we'll send you this, but I think this is a good thing to pay attention to for your properties if you're looking at Pensacola. And also, you guys should look at each other's markets now. One of the trends and one of the reasons why we're looking at two in this call is I think the consumer is really, really savvy about looking nearby as well. When we go back last year and the year before, people were like, and this is really evident when you get onto the Florida side where you have all these little markets that are, they're not little, but they're right next to each other. Um, I was showing one of these from the Visit Panama City Beach, and they had two slides that were really fascinating to me. It was surveys on what their favorite beaches were, and we looked at the difference between March and July, and totally different beaches were mentioned by the guests, which really indicated to me that people really are looking at these different beaches at different times and they're willing to go other places. So you really are competing to some degree against Gulf Shores, maybe even a little bit further down the Panhandle. I don't think you're going too much the other way. There's not quite the same kind of travel going towards Louisiana and Texas, but anyway, the other piece I just kind of pulled up is this new airport in Gulf Shores, which has a bunch of new direct flights coming in uh, from the South, Midwest, and Texas. Have you guys heard much? I mean, this I imagine is going to take a while to build in demand, but this could be a really big driver for the for Gulf Shores. Have you guys heard much about this or been following anything there? Any effect? Are you
Yeah, I
seeing
mean,
people coming in?
I see the giant planes landing over my house. Yeah, can't miss them. It's pretty cool though. From everything I understand, they picked the locations of direct flights based off the amount of people traveling from those areas. So like Bentonville, Fayetteville, obviously that's a college town. So I think it's a mixture of football fans traveling to games from here, and then people from there coming here for the beach during the summer and spring. I think that's how they chose the location. So we're excited here. I think it's going to be very good. We may not really feel the difference until next year's bookings, but it's exciting for sure, especially for a small town like Gulf Shores.
Definitely. I mean, 60,000 passengers is quite a bit. They don't say if they say this is bring through, so I'm sure that's outbound and inbound. But even 30,000 people is pretty substantial. And I know in Gulf Shores, like that being able to expand that demand is going to be really major because you guys have such large inventory growth, right? Um, I saw when I was looking at news that another big resort is getting built. I think was it by Margaritaville was building another big resort. They just opened that Embassy Suites, which in the short term I think really competes with particularly the smaller condos in the area. In the long term, I also think that the Embassy Suites is actually going to be a net benefit for property managers there because they have a lot of meeting space, and meeting space means they're going to bring events that'll overflow, and that'll be a net. But again, this year it's probably competing with you pretty hard because an Embassy Suites is a good product, really reasonably priced, and they probably don't have a lot on the books, so they're willing to sell like for whatever. That's like kind of the MO for a hotel is they're super open to selling under their brand prices for the first couple of years. So a lot of interesting kind of longer term trends here, but in the short term, probably significantly impacting the competition for you guys. Okay, so we'll start with Pensacola real quick here, and then I'll send you these links just so you can access them. And then we'll hop over to Gulf Shores in the Alabama coast. So where I am right now is, and let me get my little pen out. And if something strikes you, feel free to speak up or interrupt me or ask me a question. Happy to do so. So right now we're just going to kind of look at the top level data. It's a good place to kind of see trends. And I am on the Wheelhouse market reports for Pensacola, and I've also got Gulf Shores over here. These market reports, just so you guys are aware, these are free for anyone. So if you ever need like an extra data source, or if you like our visualizations and find that it would be easy for you to communicate with an owner or someone else with those, all you have to do is log into Wheelhouse and you can access these market reports for any market in the country, really any market in the world. And you don't have to be a Wheelhouse pricing customer to do so. I think these are pretty good to basically look at these high-level trends, and I'm going to hop over to our trends tab, and we'll pull up this occupancy piece right here. So I'm on adjusted occupancy. You can see here what we're showing is we're showing the market occupancies for each month year over year. And for right now, I'm just going to pull off 2023 and 2026. We are looking at the entirety of the market. And there's a few things here that we can kind of see. One, we see where that panic around March occurs because there's that big drop off. We do see in April that there's a recovery from that, but it doesn't quite make up for what was missing in March, right? And so this is kind of interesting here in the sense that I'm going to compare this to a bunch of other markets because pretty much the consensus I got when I was talking to property managers and people across the Southeast is a lot of people started panicking here in March, right? Because that didn't come together. April and May, since then, has had very different reactions. In Pensacola, this recovered a bit, but we're still kind of falling a little bit short from an occupancy perspective. That matches what we saw in that kind of like Pensacola, visit Pensacola data, where the occupancy rates have been a little up and down here in like year to date, and people just aren't quite getting back to where they were, but it's also not really the end of the world. This looks very different in different markets. Some places have really bad Aprils, some places totally recover in May. Few places had pretty strong Mays. But this has gotten pretty mixed, but generally speaking, things are a trench battle. People are down a little bit when you look kind of from March forward. Now, the real question is, where are we for June and July, right? Um, in terms of pacing for June, I pulled this data up and calculated it a little bit earlier, but the June pace in Pensacola is actually a little bit up right now. It was around 58, 59% last year, so it's up a little bit for June. What's interesting as we get into July, it was about at 39% also. So really indicating that that short-term window is driving quite a bit of occupancy, um, even if a market is maybe trailing. Now, I don't know if June was always trailing. I think Leslie, was it you that mentioned, or maybe it was Bailey, that June seems surprisingly strong this year? I know that was like in Gulf Shores, but stronger than people would expect.
I mean, we had to work a little bit to get everything kind of, stabilized in terms of getting those nights booked, but we're I mean, we don't have anything available right now. And we've had a couple of situations recently where, there's a building maintenance issue or something like that, and we have nowhere to move them, which I think is a good problem or a bad problem, depending on, how you're looking at it. So yeah.
Same.
Yeah.
Elevators.
Specifically the elevator at Crystal Shores West.
Yeah, yeah.
It's been a fun one.
I have heard from some people more on the Gulf Shores side that historically they'd always considered June to be the peak or July to be the peak. The last couple years, June and July have really evened out to be pretty similar in performance. And I think what they mean when they say that is that July's come up a little bit while June's come down a little bit. Uh, our largest client in Gulf Shores describes that as he thinks it's probably a few factors. One of it is that the summer's kind of shifting a little earlier. People are going to school earlier. They're kind of starting a little earlier. He thinks another thing too is, well, actually, this is more me. I think people are responding to the fact that people expect July to be higher, so the rates are actually higher. So early bookers are looking a little earlier just because the rates are a little better, right? And that's actually making that's bringing the whole time period up compared to July. And it's
Right.
probably a little bit of both. Maybe do you guys have another idea for what might be going on there?
I mean, I agree with you there. I mean, I feel like the 4th of July and maybe Labor Day, Memorial Day, probably Memorial Day more so than Labor Day, like, that's the peak rates, like, whatever you call your number 1
Yep.
A level, and so I think people see that 4th of July rate and say, "Now I'll go a week sooner," or whatever, just to save, whatever amount of money, in
Yeah.
terms of the differences.
I actually think that trend is pretty consistently something that we have to deal with as an industry. The Visit Pensacola stuff, that trend where was the year-to-date one? Occupancy's down, room rates are up. That to me is a mismatch in the market to the consumer. And I think there's a few other hints that like sometimes people's expectations get in the way of being able to actually find the demand. I think March across the Southeast looks like that. People's expectations for spring break is always so much higher than what seems to be coming in the last few years. And I think fall is another example of that, but in the opposite. It's like people don't have the same expectation for fall, and falls have been doing pretty well across the Panhandle and across um, the Alabama coast, not so much the Texas coast. They're not really doing too well there. But I think that's also partially in this economic environment. People are like wanting to travel, but they're going to buy where they can afford rather than just paying what people think it's worth. And so you
Right.
see
That's what I.
these. Go
Sorry.
ahead.
Go ahead.
No, you go ahead, Bailey.
That's what I was gonna say, man. I was gonna go back to my point from earlier. I think the economy's got people pressing the brakes a little bit more than they have in the past few years. And then also I'll throw that Easter observation back out there. Easter really took away from March compared to last year. A lot of people travel down here to get days off in the South for Easter. So
Yep. And Easter was pretty different. We'll look at the Gulf Shores one too. I'm just going to pull this up at the daily level so we can kind of see where, um, because April was pretty close to last year, but there was definitely a gap in March. And so this is the year over year occupancies by day. And we can see that this spring break date is like totally missing, right? It's not totally missing, like there's still strength here, but it's really spread out. You don't get the same compression here. This is where Easter is, so that's missing. And interestingly, so Easter was the 20th. You get some strength here, but it's not like it takes the extra demand from March and moves it over. It's just this kind of was stable in April, and we're just missing some peaks here. And that's where we're lost in March. Now, I'm not sure if this is because the spring break time periods were way more spread out. It probably does contribute to the fact that because Easter wasn't stacked along spring break stuff, you just don't get the kind of competition in the rate to drive it up. And the occupancy, I guess that's the term they would use in the hotel world is compression. But I do know a lot of people were pricing these dates a lot higher. And if that didn't come in, now suddenly everyone's competing in a much shorter booking window at a much lower price. Um, okay, kind of coming back here to the occupancies. Last little note is just August. August is at 8% right now. Last year at this time, it was also at 8%. So we're kind of on track here for July and August. And that's probably a good sign. Uh, Something I do like to check is just our highest performing listings, just to see if there's a difference in trend, but it looks pretty similar. Little bit of attrition in March. April actually did perform a little better, so there was a capturing of market share there on the April side. And then pacing's looking pretty similar here. So no major differences. Sometimes the reason I like to pull this up is sometimes you see really big differences. Pensacola and my hunch is going to be Gulf Shores aren't deviating too much year over year right now, which is a pretty good thing for them. But some markets are looking very, very different when you look at these different segments. Okay, so let's take a look at one other thing from this side, and then we'll kind of shift over to Gulf Shores, then we'll decide if we want to dive into a little bit more deep stuff. This is asking rate. So asking rate is averages of posted rate positions in the market. This is going to kind of give us an idea of how people are advertising across the market. Uh, overall. And the first thing here is you can see that the rate positions are quite a bit higher in general, and they're not really deviating much in terms of where the premiums are across across the year. So people are kind of have these premiums in place from April forward. They did collapse a little bit in March where that first big blip occurred. You do see those kind of fall. And keep in mind, a lot of these dates are in the future, so these will change over time. This is kind of a live understanding, but we have here pretty decently higher rate positions across the board. If we recall looking at the Visit Pensacola stuff, we were seeing consistently that rate positions were also higher in the ADR. So this is going to include the stuff that doesn't sell, as well as the stuff that is selling. And people are just kind of holding a pretty high rate position. Now, as that pacing has stabilized, that may not be a terrible thing. One thing to keep in mind too, because we are looking year over year, is some of the scrape data is also going to be a little mismatched year over year. So this is something to pay attention to. The last few years, the way scrape data has been occurring has changed. So this is probably a little inflated by fees. So this is probably about 10% over what would have been available for us to see in this data point last year, because Airbnb is starting to put their fees in a different place. Most of that's been the same, but they recently made another change too. Now, have you guys been aware of that at all? I'm sure you're probably seeing it, like the changes that like, do you distribute much on Airbnb? VRBO is doing it too. They're
Yeah,
just changing consumer
we
experience.
saw that. We saw that, and we made some type of adjustment to we've rolled up some of our fees, maybe, I'm not sure, but that's definitely VRBO search function too. When they changed to be similar to Airbnb, that threw our percentages whack as well. But just adapting, pushing forward.
Yeah, it's actually very good for the consumer and I think good for the property manager. It makes the data a little bit weird for a brief time. Like it'll be for like a year. The pricing data will be a little hard to compare year over year because unless you have like systems that are doing that on the back end, but if you're just looking at raw data, it'll be a little hard to compare year over year. In terms of like the changes to the way the consumer is getting prices, though, it's probably much better. We actually know exactly what the consumer is paying now, which we didn't always in the industry know very well. You also have a situation where the property manager actually has more flexibility with their fees because now that the consumer just sees the total price, you you can organize your fees whatever you want. You don't have to like force them or hide them or whatever because they're going to be hidden anyway. So it gives the property manager a lot more flexibility to kind of break out their own line items, but it does mean that you do have to be pretty aware of your fee structure. Fee structures are really important right now because in the past, if you had a really substantial fee structure on top of your rent rate, that would probably benefit you on the channel and maybe you get people bouncing when they purchase. Now it's very visible. So in terms of your guys' fee structures, what do you guys do for that? How do you kind of set up your fee structures?
Yeah, we do we have the processing fee and the damage waiver, and they're all tiered based on the property, and processing fees usually a percentage. It's easy to have a conversation of it's a percentage of one of the other charges. The most interesting conversations and the ones that I'm thankful I don't have to have is when an owner calls and they're trying to figure out how the price of something came out and what their rent is. But
That makes sense. Leslie, do you have a pretty
Yeah, similar. I mean, we call it an admin fee, but it's essentially a tiered, kind of makes sense. And then obviously cleaning fee and damage fee. So, and parking passes, if we can broker those. Not every property allows us to sell parking passes in advance, but we find that people really prefer for it to all be bundled if it can be. We get a lot of pushback from people who have to register on site, even if it's in the listing, they still kind of, oh, all this was paid for. So we've had a lot of those conversations too.
Yeah, that makes sense. And I think like optional fees they don't really count the same way in this when we're thinking about it, but it sounds like you guys aren't stacking too much of a fee structure on top of your rent that would be abnormal. So probably a little easier to look at the data. I do talk to some companies who really, you know, really have a lot of fees. It's like could almost be like upwards of 40% of the price, which surprises me. I think that makes it really hard for everybody involved.
Yeah.
And I definitely don't recommend it. Um, but it's not uncommon to see people have fee structures that are up into that 30-40%. Um, I don't think it's normal, but I do think it's not uncommon. Okay, one other thing I wanted to glance at here is just what the high performers are doing. Not too much different. Um, and let's take a look at one more, which is just nightly rate. Okay, yeah, pretty similar. Okay, so in short here, occupancy perspective, a little bit of attrition through Pensacola, little bit of pacing, interest in June. I'm really actually very interested that June is pacing higher. I could figure this out, but it would be interesting to know where we were a month ago if it started from behind and is now really strong in the short-term window. And pretty good sign here because these are pacing on track. So overall, seems to be much more stable, and that's a story I'm hearing is after the panic of the spring, it's a trench battle, but there's a lot more stability coming into the rest of the summer. Part of that, I think, is people are not holding the same kind of like expectations, and it allows them to be a little bit more honest about like just getting filled. But also, it seems like the summer has come together pretty decently, a lot better than what people were thinking at the end of March. Let's hop over to Gulf Shores because Gulf Shores stuff does look a little different. We're going to be looking at the whole area right now, so it's more than just Gulf Shores. It's like Orange Beach, and we do have Mobile included in here, but that's pretty negligible percentage of the listings in this market report. So really most of the listings that we're looking at here are going to be right here. Um, and let's go over to the trends section and we'll take a look here. Um, Overall, pretty similar. Now, Q1, low season, snowbirds, not quite as strong this year. I don't think that was triggering any concerns for anyone. It wasn't until March that people really got concerned. Interestingly enough, we do have one of our larger organizations in our portfolio is in Gulf Shores, and they actually noticed softness for the spring as early as November. Very hard to do, right? They have a lot of data. They have some like direct sales marketing approaches that help them identify demand. And they were noticing pretty early that things were starting to look like it might be a little weaker. So it is possible to get an idea of that. Um, it was showed up a little bit in key data too, but it looked a little weird. I don't know if were any of you guys at Darm last year in Destin? Um, Key data
Yeah.
shared a presentation. You were there, Bailey?
Oh yeah.
Key data shared a presentation that was showing the market data as of December. And in the Southeast, what was interesting to me is they actually showed that early occupancy pacing was up. But they showed that ADR was down for that early occupancy pacing. And people took that in a lot of different ways. I took it as kind of like a warning, but with like an optimistic warning. Some people took it, in my opinion, the wrong way, which is that the next year is going to be great. We're up in occupancy, it's going to be awesome. But the fact that that ADR was down to me indicated that one, there was revenue managers being a lot more conservative, and the customer was rewarding people for being more conservative on the price position. Um, the optimism there is that people actually are willing to book if the price is right. And I think that's kind of the key for revenue management right now is make sure the price is right. Find the right price for most future dates because people are looking to book in advance. You can take that market share, but you have to have a price that's going to be competitive. And the right price isn't necessarily the price that hits your budget. It's the price that the consumer is going to pay, right? Um, Okay, so kind of moving on, we do see that big blip here in March. Everyone starts to panic. Pretty good recovery across April, actually, and pretty decent performance in May, but still a little bit of falling short. Now, when we go into the summer, Gulf Shores does look a little different from the pacing perspective than Pensacola does. Um, We are a little ahead now in June, which is good. So we were at about 64% last year. So that June is coming together pretty good, right? That last minute booking is looking strong. For July, we're at 42% right now. At this time last year, we were actually at 48%. So it's actually falling a little behind as we get past June. So instead of being kind of like right on, it's falling, it's a little bit behind. And for August, it was at about 13.8%, so a little behind for August, although August is going to be less important. The booking window is significantly shorter. And that's what is interesting to me though, is we have three different situations here, right? We have pretty strong pace here, a little bit weaker pace here. In fact, it's a little behind and slightly behind here. Now, some of that could just be the shifting into the booking window, right? It also, I think, it could be a function of, I've heard this from, we have a lot of clients in Gulf Shores in particular, so I talk to a lot of people. Um, there's just a lot more gaps too. People are stayed shorter. I know some of our largest organizations really loosened up their rules on check-in restrictions and check-out restrictions and length of stay much earlier. Like as early as this spring, they were like, you know what, we're just going to let people book what they want because we know this is going to be a battle for occupancy. And so that situation itself could be causing pacing problems, right? I don't have the number of reservations pulled up here. I would be interested, that would be a good thing for me to look into is, how similar is the reservation count compared to the actual occupancy on the books. But it does look like the short-term window is doing a pretty good job of filling as well because, that's a little behind. We're at 64% last year, but it is still pretty high. Now, what do you guys think about that? Do you see differences in the length of stay situation, or have you made changes to how you're operating length of stay?
Yeah, we don't require, only certain HOAs like mandate length of stay, and we don't drive that. That's definitely, it works in our favor to be more flexible in terms of allowing people to have the 5-day weekend versus the 7-day vacation and things like that.
Yeah, we cut down the minimum stay a little earlier this year than in previous years because I saw the same thing as you and Darm, and then even in October and November I saw the same signals. So in order to save RevPAR with the lower ADR, I figured we'd crank up the amount of bookings we get, and so I was able to me and my team were able to save RevPAR there. But yeah, the length of stay, it's not really something we keep tabs on, but based on how our strategies unfold is what it comes out to. And we're down a little bit, but not anything significant.
Yeah. Do you when did you pull back on, like, where do you start? Do you start at like 4 night, 5 night? And let's, for the sake of
Five.
like conversation,
Depends
let's,
on the property.
yeah, three
Typically
bedroom,
five.
4 bedroom condo.
If you want to really focus on 4th of July, I mean, that's a week down here that I think across the board, all companies try to stay at 7-night minimum as long as they can, because that's going to be our best bookings for the whole year. But we've gone down obviously less than a month out. It's 3 nights minimum. Just increasing the process of, I don't know the exact timeline. We have a team of like 6 or 7 people. We meet once a week, so just it comes out of discussions there.
That makes sense, and I'm sure it adjusts for all of your different bedroom counts. Um, I heard a lot of people that I talk to on a regular basis in the market were making adjustments between April and May for the summer, getting down to that 3 night, not for the entire portfolio, not for everything, but starting to open that up, where in the past they would have done it at the earliest in May. So you saw it kind of shift forward about 30 days. Interesting kind of tidbit when you look at other markets across the Southeast, the Panhandle, same thing. They've been kind of eroding their length of stay restrictions for the last couple of years as well. That was coming in pretty early. Some people did it as early as March when they started to see those shocks. Once you get turn up across the Southeast into the Carolinas, they are just in the early phases of eroding those. A lot of those companies are still on 7-night stay Saturday to Saturday, but we're seeing probably this year will be a big erosion of that restriction being constant across the markets. Um, I wanted to take a look at this real quick. Turn this off. Look at 1 year and zoom in here. Oh, sorry. I wanted to, yeah. So this is the 4th of July. So right now we have green is last year's ending. This is the current occupancy. And July does look like it's coming in pretty good. Looks like these gaps around it are quite a bit weaker right now. This is always weaker, but this is a pretty long way to go. I think that's going to be the biggest risk. What I'm looking for here is there's actually shape differences I'm looking at for. So these this is going to be like really subtle, but these are a little bit more rounded. See how this is like a little bit more pointed, a little bit more pointed. What that's indicating to me is that there are shorter stays. People are taking the shorter stays. The rounded occupancy here means that there's more people across more days around it. And the fact that these are kind of pointed early on indicates to me that people are probably taking those 3 nights instead of the 4 nights much more consistently. We could look into some lead time data for that, or sorry, length of stay data, but I'm going to skip that for now. We do have some distribution charts. It's a little harder to look at, so I'm not going to do it. But just from a shapes perspective, it does look to me like they're mostly similar, so it's not a big deal, but there is a little bit of a difference here in terms of the way people are kind of doing this. Now, this is interesting too. There's a pretty big difference in shape here. So last year we did get some bumps into August. It pretty much dies off once we get the 10th. That appears to be occurring a little bit earlier this year. So you can see that it really falls off before the 27th and then it smooths out. Part of that could be booking window, right? We're not yet in the booking window for August, but it does look like that summer is not quite stretching out as far this year. Okay. What else do we want to talk about? We got like 10 minutes left. We can kind of take a look at asking rates. We're seeing kind of a similar trend here where rates are kind of higher. I think a lot of this has to do with changes to the rate position in the OTAs. So when we knock about 10% off of this, it's only going to be slightly higher, which I still think is a little bit of a problem in the marketplace, especially if there's occupancy under pressure. And there's definitely a little bit more pressure on the Gulf Shores Orange Beach side than there is on the Pensacola side. And one of the things that I think is important to kind of note is, how are you treating your fall pricing right now? Are you paying attention to it much?
Yes, we have Shrimp Fest down here in the middle of October. It's always driving demand, so we've been focused on getting those prices right, and we've seen it's up there in the top 5 for us demand IQ and key data of people searching on our website. So we've looked at October a decent amount. And yeah, we try to be open, what is it, Sam, 18 months out, right? Price wise. So
Yeah.
even looking into next year and early fall next year too.
Yeah, I think that getting the fall pricing in line now is worth a little bit of investment of time from a revenue management perspective. I mean, you mentioning that like some of those fall dates are in the top 5 search dates, even in summer right now, is a big deal. And I think it's very common for people in our industry to only really look forward 60 or 90 days because they don't have time to do more. But it is worth going and checking your fall pricing position and just check that against your historical ADRs, right? Because if you're priced way higher than what you did last year, you're really just not being competitive. You're kind of abdicating dealing with that till later. But if you are priced where you kind of similar to where you were last year at a reasonable premium, you can be capturing some of those people who are looking because there are people who are looking now.
Yeah, I think that like what I mentioned earlier is having that right price. There are people looking to book. It's just the consumer is waiting for that target price they're looking for. And especially being mid-October, we want to take full advantage of Shrimp Fest. They're probably retirees on a limited budget. So we're just trying to find that sweet spot to get the best booking as far out as possible. You know how it is.
Yep, makes sense. And There's a few different things here that, since we've just got a couple minutes, I'll show you guys. We do have, if you don't have good tools to just like quickly visualize your sales and pickup and where your rate position is, Wheelhouse, part of the free tools we have will show you that. So um, this is one of the free tools that we have. You can filter down into different groups of listings. This is going to look a little messy right now, but bear with me. What this is showing us is the occupancy on each day in the future. So you can see it's like a visualization of your tape chart, and it's actually highlighting where the sales are occurring. So you can very easily see like, hey, this date range, not a lot of sales, not a lot of occupancy. These date ranges, selling a lot. This isn't in the same market, so don't expect to see the same trends, but the answer here is this is a great visualization to quickly just see where am I selling, where am I not selling, where's my occupancy high, where is it low. You can very easily pull up same time last year on this too, so you get a comparison. So we're pacing behind here, we're pacing ahead up here. It does show the sales. And we do have views here too that will allow you to compare your rate positions. So if I turn a few of these off, just to not have so much stuff on the page, I can pull up the ranges of my pricing, and I could also pull up the ranges of my ADR. Or let's do last year's ADR actually. Last year ADR. And so I could use this to really zoom in, and let me pull off last year's stuff too. And kind of see like, hey, in general, I'm priced way higher out here in September than what I actualized. That is telling me I need to go do that work so that I'm actually competitive right now. These are all free tools, and you can filter up and down. You don't have to look at your whole portfolio. You could look at bedroom counts. You can create custom groups. All of that. But this is one of the free tools that we have, and we're happy to get you set up on it and also show you how to use it. We'll give you a method to use it on kind of a regular basis so that you can, incorporate it as a 30-minute or even an hour process a week in revenue management and really just help you optimize what's going on. The market reports were free also, so you can access those from us anytime. And if you ever want to go a little deeper, we didn't do that on this call because we were talking about kind of a wide area, but Wheelhouse data does have the ability to get into a very specific location. So if I went to Shores here, this market data tool will actually let us draw like a very specific zone, filter down into the kind of listings that we want to see. So usually I'll filter down into like the same bedroom count, and I'll do some stuff for performance. Like I don't like to look at all the lowest performing stuff. So I'll, set it so that in the last 365 days, I'm just looking at stuff that was, 50% occupied or more. And this will generate a market report for you just off of the data in the place you picked. So a lot of options here. This one is paid, this sets one, although all the data on this map is free. And this can be really good for looking at data on specific comps, because if I zoom in here, I drew this thing, but all of these little dots are listings, and you can access data on these listings. And anything you're accessing on the map is actually available. So if you're talking to an owner and wanted to just like pull up the map and be like, well, let's go look at some listings and see how they're doing compared to what you're doing, you can do that here. If you want to track the data, or they ask you to track the data, then it becomes paid, but there's a lot available here for free. Okay, cool. Well, I told you I didn't want to do too much. I try not to hit you with too much product stuff while we're doing this conversation, so I'm going to stop there. But anyway, what do you guys think? Any last thoughts?
This is great. Appreciate you.
Yeah.
No problem. We'll send you guys the recording. I do think it's a trench battle. I would just say like rest of June, July. It's just a matter of making sure the pickup's there and trying to get all the occupancy. And my big piece of advice would be, if you haven't checked your fall rates, just make sure they're competitive, because I actually think there's a lot to gain by just being in a good occupancy position. And things seem like they're going to be, at least for now, a little bit more stable. We'll see how the news treats us. Awesome.
All right, thanks, guys. Got a hard out today, so I'm gonna go ahead and leave. But I appreciate y'all.
Appreciate your guys' time.
See ya.
Bye.